Glenn, let's talk about inflation because it is a common question. So, how do all these stimulus measures affect inflation? Are we going into a time of inflation, deflation, stagflation? What is your opinion and why?
Uh, Without a major economics thesis on that, I'll just keep it simple. I don't believe that inflation is a concern at this time. With the current recession, we've got high unemployment levels, lack of consumer spending. The loss of demand in the economy caused by the economic shutdown has really outweighed the loss of supply, which will contribute to reducing the risk of inflation. On the flip side of that, some of those reasons could create a deflationary risk. However, at this time, with the large-scale fiscal stimulus package that has come in, it's really helped offset some of that demand loss. As I expect the stimulus to continue for some time, I think we will be able to kind of navigate through any issues around deflation. So I'd probably say that both of them at this stage are non-factors. And, as we move forward through whatever the next kind of number of months look like and the phases look like of recovery and so forth, things like that can change for certain. But at this point, with where we're at, I think both are non-factors in the short term.
And if we can switch gears and talk a bit about the Capstone pooled funds, and perhaps you can comment on the prospect for deals within mortgage pools and whether we've seen any impact on the funds in general due to COVID-19.
Sure. I believe it'd be hard pressed to find anything that hasn't been impacted one way or another by COVID. So our mortgage pools really are no different. Most of our projects continue to remain operational throughout Ontario's shutdown. However, we have seen slowdowns as we deal with social distancing, worksite protocols, rules and regulations, along with the absorption of remote working environment for governments and lawyers. These have all impacted the pace of operations. Another area that we have seen slow down are with final closings of sales. This has caused a delay in wrapping up a number of existing mortgages. That hasn't meant any kind of issues with the mortgages. It just has stretched out the term or the length of those mortgages. But during that time, one of the really encouraging signs, and makes a statement about the general health of the overall real estate market, is that we aren't seeing people walking away from those sales, which is really great. On another positive note, we have seen the GTA, or the Greater Toronto Area, continue to be resilient with sales rebounding significantly after that slow April. The lack of supply in the market continues to be a key contributor, we believe, to this resilience. In fact, over the last few weeks or so, we have actually seen some of our projects achieving higher pricing than originally budgeted in their pre-COVID plan. So as we move forward, we're finding that there is less money competing for lending opportunities. So really is providing those with capital available, like our mortgage pool, an opportunity to be selective of the projects we are looking at. So during the initial stages of the crisis, we had focused on ensuring our current projects receive the funds needed to remain healthy and progress forward. However, as we continue to have cash available, we've started to review new opportunities now, and that positions us well. We can be selective, focusing on really the sectors and markets that we feel will be positioned well during any recovery phase, or potentially even if we have future slowdowns.
So I think we can all agree that these past few months have exhibited a lot of market volatility, just a lot of uncertainty and unknowns right now. But is there something maybe that you're excited about that you can share with us? Give us something to look forward to?
Yeah, definitely. Stress markets pave the way for opportunistic buys. So when we find ourselves in a stressed environment and we have cash, then it does position us to take advantage of some of these marketplace disruptions. So having cash available is key to us during this type of time. And as I already mentioned, just on the last question, our mortgage pool, it has cash available to invest. But additionally, we also have liquidity in both our private high income fund as well as our non-traditional equity pool. Therefore, these strategies, we have a great opportunity to position new money in opportunistic investments. So we are now beginning to see some very appealing investments in both the real estate market as well as in private debt, and we are assessing those opportunities. These investments have occurred where the crisis has created a particular need or needs, which our cash allows us to be in a position to take advantage of. And in some of those cases, it actually affords us better terms than we would have had in pre-crisis. So these opportunities we are reviewing, they're in the beginning stages of due diligence, so probably premature to speak about any specifics of what they look like or what they could represent. But one thing for sure is they are clearly strong additions to any portfolio if we do include them. Another area that we benefited from has been timing. We had made some decisions prior to COVID as to some investments that we wanted to invest in, such as our investment into farmland in our fixed income pool. And we're now actually having some of that capital called. This is allowing us to be adding new investments that we already were favorable towards at a far better time, at a better value, and with improved market opportunities. So this really is a time that we want to be looking for opportunities. We want to have cash available to invest, as we don't want to just kind of ride out this market turmoil. We want to be positioning our investors to profit from them.
Thanks, Glenn. As always, we really value your insights and appreciate the time that you've taken today. So thank you again.
You're welcome.
So Janet, I guess Glenn did most of the talking for us.
It seems that he did, yeah. And you know what? We don't mind because it's always great to hear what he has to say.
Agreed. And if you'd like to find out how to take advantage of some of the opportunities we're seeing in the markets, please be in touch with us by phone or email, and we'd be happy to set up a call. We'll be doing our next video update in a couple of weeks, so I hope you'll join us then. Bye for now.
Bye.